Good evening. It's 7:58 p.m. in Izmir, Turkey, and I would like to start this English video. First of all, there's a very dangerous geopolitical situation in the Middle East, and based on this, the investments are based on this geopolitical, let's say, gamble. I would say call it a gamble, but it depends on how long it's going to last. If it's going to last a lot longer, are more countries planned within this, let's say, movement, and with whether Iran will be involved, Iraq and Syria will be further involved. We will see. And as this war starts raging, it's going to affect gold prices and oil prices definitely. Right now, there's a challenge because both the U.S. government bond yields are increasing together with gold, whereas they should be opposite, because when interest rates increase, gold price should be coming down. But the opposite is happening now. They are both increasing at the same time. I'm reading from a source here. For the first time in 23 years, 8% mortgage rates are officially back. As the bond interest rates increase, the mortgage rates increase as well. So it is becoming more and more difficult for not just for Americans to buy houses in the USA, worldwide for the developing countries, finding loans cheaper is becoming impossible, because less than 3 years ago, this 8% was only 2.6%. And right now, for this month, just the median house, which is like $403,000 in the USA, requires $3,000 monthly payment to be able to buy one. Even say, I don't care, for the 8 years, I'm going to just renew my loan in the future if the interest rates come down. You should be paying $3,000 monthly. So it's getting more and more difficult to rent it out for the equal price of the mortgage payments, or making some money out of the after the mortgage payments, making money from rental. So things have changed completely from 2.6 to 8%. So besides this, I would like to read you some U.S. bond rates right now. Just getting a U.S. loan, U.S. dollar, U.S. government guaranteed, 5.40% monthly. This is annual, but annualized is 5.40 for 1 month. So you're not going to get 540 for 1 month. You're just going to get 1/12 of it. And 2 months is 546. 3 months is 550. 4 months is 555. 6 months is 558. As you see, it's increasing, not like inverted yield here. And 1 year, see, it's inverted now. 1 year, it's 547. They expect within 1 year bond rates to come down, slightly down. At the moment, at least, it's priced like that. So 2 years is 521. 3 years is 504. So next 3 years, today, the market is pricing U.S. bonds at 5%, which means if you think that Fed is going to reduce it to 2%, you should definitely buy, because 5 years is 492, almost 5. So even 7 years is 495, 10 years is 490, 20-year bonds are 525, 30-year 5.02. So you can get a 3% if you believe Fed can reduce the rates to, but market doesn't believe it. They are not buying it. They know, because the rates are increasing like a rocket. They will keep increasing like a rocket. Nobody wants to buy bonds, okay? So everybody is now, but they have to, because individuals, they have a choice. They can invest in gold, silver, stock exchanges, or bonds anywhere. But the people who invested in bonds last year lost half of their fortunes because the value of a $1,000 bond, because it's only giving less than 2% interest. If you want to sell it now, it's not even worth $500. So it's a big loss. So basically, people living all this loss, nobody wants to buy the US government bonds because they are thinking it's going to be 7%, 6%, 8%. So inflation fight, they haven't made gain. Yesterday, some numbers came in the USA about retail sales, which show some increasing signs. But this is all a trap. Let me call why it's a trap. Because in the last 3 years, US inflation rose by 20-25% if you just check Bureau of Labor statistics. So when I sell something for $10 and it's now $125, if I buy the same item, it will look as if, just the same cart of products at the let's say food store. It's my payments will increase by 20-25% in 3 years. So this is not good for like saying, oh, our sales are increasing. This is bad because you are selling same stuff for a higher price. There is no product increase in this. This is just a cost increase. If inflation was 0 or 2%, if your retail sales went up like 10%, then you can say, okay, the retail sales increase. But if it's only prices increasing, if the Fed thinks that this is it's inflationary, everybody is buying, this is wrong. It's not, because it's just the cost of items are going up, not that people are buying. Plus, I can see the labor rates in the USA. They are not falling drastically as announced by the Labor of Bureau of Statistics, but the quality of the jobs are falling gravely. So it's like if there are more jobs created, they are all part-time, very low-paying jobs, whereas the good jobs, full-time jobs, are getting lost. And people are not working just for having fun. Now they are working a couple of part-time jobs because they cannot meet the ends at their payments, monthly payments. So it's not good news that people are, but it's announced as if, people are finding lots of good, jobs, part-time jobs. That's not the case. They have to find part-time jobs or they are bankrupt, okay? Because their credit cards are full 100%, and that's the highest rate of interest in the US, and $1 trillion loan Americans have on their credit cards with very high interest rate. It's not investment, it's just spending, expenditures, because US credit cards are not like Turkey, where they applied very low interest rates and some people use their cards to invest, like me. Like if they offer you 2%, 3% credit card loans now, you would buy something, because the government bonds are paying 6%. So this happened in Turkey, and we made extremely good money just from plastic, using plastic, turning it into gold, okay? Buying gold, physical gold, and just the gold is going up extremely fast today. I just saw from I'm not reflecting prices to you. The gold is now $1952 instantaneously, okay, $1,952, but it spiked and passed 1960 to up to 1963. A spike means momentarily, second, in a short time, jumping over price and coming back because somebody suppressed it. They sold paper gold, anything, just to keep it low. Most probably a big bank, big sales, just to control it. Or it's not the time to get profit, because the geopolitical tension in Middle East is increasing. It's no time to get some profits and take back and go invest somewhere else. There is no place to hide or run right now. Only mainly safe havens are gold, silver, oil, and commodities. Okay, so many old timer investors I know, they are all on commodities right now rather than stocks and other things. Stocks plunged in Turkey today by 3.5%. I want to see what it's like right now. It's continuing, of course, in the USA. Um, I like to see how it's going at the moment. Um, Yes, they are also down. S&P 500 is down 7.72%. Nasdaq is down 0.90%. Dow Jones is down about half a percent or 50 base points, whatever you want to hear. And Russell 2000 is 1.42 points down. S&P 500 VIX is up 666. VIX shows the danger in the investing. Okay, so that's the number to check. And the prices for future gold is 1965 at the moment, up $30. This is December gold. Okay, 1965. You can buy December gold with at 1965. We are very close to $2,000 again. $35 left to $2,000. Silver is up 23.08 ounce per ounce future silver, and gold is faster than silver for the first time, about 6 times more increase in gold prices comparatively to silver. This means silver is normally always more attacking than gold when going up or falling down. It's a more harsh movement. Right now, it's not. It's gold going up faster. Brent petroleum is up about 2% to $91.72. American petroleum oil is up $2 by 2.5% to $87.50 per barrel. So mainly these are the latest, and the U.S. dollar index is still 106.24 against the euro and this currency basket, which is a controversy because nobody wants to buy American bonds, whereas American dollar, which is the behind the bonds, are increasing. And everybody asks me, why is this happening? You are running away from something while you are running to it. The problem is, for big corporations and big money like trillions and billions of dollars, they cannot go and hide in gold. There is not enough gold to invest in that. So for temporarily running away, they only have one harbor. They must go to government bonds. So, and they think that's the most secure one. And we saw how secure it is. The banks are failing extremely fast today because yesterday the bank profits are declared. Some banks, I don't want to mention the name, but they announced they made $50 billion of profit in a quarter, whereas they have about $100 billion of loss, which is sitting in their bond prices. And if you don't price it, if you don't sell it, you're not going to realize it. But if something happens and everybody wants to pull their money out, they are finished. They are worse than 2008. So this is the real situation. And these geopolitical tensions are not happening by chance, because all at the same time, right at the time when Europe, United States, and all other countries are having a fight against Russia in Ukraine. They are not personally inside, but they are giving aid and supporting Ukraine and trying to get Russia as powerless as possible in the future. And China and President Putin of Russia, they met in China. So they wanted to increase the business to $200 billion per year. And yesterday, Biden, before moving to Israel, these are not coincidental. I tell you, this is no coincidence. He declared that he's not going to sell the artificial intelligence IA chips from NVIDIA to China. So the prices of the NVIDIA shares dropped drastically. because company wants to sell it. But you say, this is a critical issue. I don't want you to sell your chips to China. So this is an economic war, war in peace, not a hot war like in Israel, where you have blood and tears, but this is economic war. Like also in Arkansas, in USA, they passed a law if they believe that there is a purchase of land in USA, which is dangerous in Arkansas, they could cancel it. So first one they canceled. Syngenta is a seed company, which I'm familiar with seed companies. I sold lots of seed all over the world, including Mexico and USA. I came to the Chicago seed meetings. So they bought land about 100 acres to produce Syngenta. It's now Chinese. Chinese bought Syngenta. So now the Arkansas government, let's say, the state government, gave them 2 years to sell it back to Americans. We don't want Chinese to buy our land. This sounds like similar thing, like, maybe they are thinking, Israel bought land from Palestinians. So are they thinking something like that? Maybe they passed a law. I'm just reporting to you. This is Arkansas, okay? And these are difficult times. So also there is hot fight in Israel and Lebanon, which is not just a Palestine and Israel thing. It's burning the whole area now. Every country is getting involved because last time the hospital, everybody knows a hospital is striked. I don't have proof who done it, who did this, who done this. I cannot say anything. But overall, the reactions, if there wasn't this fight, that wouldn't have happened anyway. So nobody knows. And the claimants say we don't have we didn't do it from Israel. But the opposite side says we don't have such a strong bomb to destroy the whole building at once, So I cannot judge. I'm not the expert on this issue. So we will just wait and see. But what I can talk, like the map behind me, I can see the results of this geopolitical changes and their effects on economy. So right now, basically, gold is going up, petroleum is going up, American interest rates are going up, they're all going up, and every people is, all the people are suffering because of this high costs of everything, oil, the bonds, loans. So it might have been a good lesson so governments don't borrow so much, because right now I was expecting Fed not to increase the rates to 4%, 5%, because I gave them deadlines in the past. I said, if you increase 3%, it's going to be in your budget. If you go to 4%, it's going to be your whole defense budget annual interest you will pay will be equal to defense budget. If you go to 5%, it's going to be all your national retirement and social security network payments, social security payments in the USA. So it's going to go there in 1 or 2 years. The whole social security payments equal interest rate payments. So this is not sustainable. This is not sustainable. If you print more, there will be more inflation. If you don't print, who's going to pay for it? So these are very dangerous days. So I tell everyone, instead of investing to make big profits, just protect yourself, protect your money from inflation and maybe the potential coming recession, which we are calculating to arrive in 2024, at longest by mid 2024. It's a monetarist calculation, and so it's a formula basically. And when we placed it in formula, the amount of money cut back from by Fed instead of printing this time, it's going to cause a recession. So, but you may say they have hundreds of economists. So how come you tell them you don't? Because they cannot. They are government employees, okay? They cannot tell you the truth. So we can tell you the truth. We are not getting paid by anyone to keep people calm and silent, okay? So we are just doing the calculation. We are saying this is the result. Sorry, I can't do anything about it, okay? So I wish you all a nice Wednesday night. We middle of the week is over for us in Turkey. Maybe you are 8 hours behind us, so it must be about lunchtime in the USA. So I wish you all a nice midweek, and we have 2.5 more days. I think the markets are going to expect to end this 2.5 days with very big anticipation. They wanted to end tonight, but unfortunately they will last another 2.5 days. So we'll see how much damage we will see in the markets, and how much profits in some commodities. People who hold commodities, we'll see. I wish you all good night, and see you later again, maybe in tomorrow's broadcast.